Bitcoin broke through the 22,600 trigger level, resulting in a current retest of the rising wedge support. With CPI just around the corner, this is going to be a determining moment for the future direction of Bitcoin over the coming weeks leading up to FOMC. Let's go ahead and jump into the analysis. Okay guys, welcome back to the channel. Thank you for tuning in to another video. I hope you're all having a fantastic day today. We're here to talk about Bitcoin, and of course Bitcoin has seen quite an aggressive rally over the last couple of days on the back burner of that announcement from the Fed essentially saying we're bailing out the banks are not looking very good, and we'll talk a little bit more about that later in the video. But we're here today to talk about the price action, we're here today to talk about the technicals, the structural analysis, what we expect to happen next, how the price is going to respond to CPI, what the CPI data could potentially be, and how that impacts the market. We'll go over traditional markets and market data and so much more. So go ahead and click that like button, hit the comment button if you have any questions, and subscribe to the channel. We do daily videos focusing on data, the charts, the technicals, the structure, no emotion, no bias. You can also find us on Telegram if you're interested in more content. You'll find all of our charts, updates, analysis, all of our videos, educational posts, news events, news releases, and so much more. If you're interested in our VIP channel, guys, we do have a trading channel where we post daily trade signals with specific entries, specific targets, and specific stop losses. Everything is detailed for you guys. We have our main group chat and our VIP exclusive group chat there. So we get access to the main channel where our trades are posted and our VIP exclusive group chat. You can find all the membership information and trading track record in the pinned comment. Let's go ahead and jump into the video, starting off with the market data. And what a crazy week this has been. I'm not gonna lie, this is probably one of the craziest weeks I've seen in the markets for a very long time. I can't remember a crazier week than this, guys. We've seen 3 banks crash in 10 days. We're seeing more and more bank stock just dropping 60%, 70%. Many bank stock has been halted trading. They've literally stopped the trading because these stocks are just absolutely plummeting. And as you already know, guys, one of the ways banks draw liquidity is by off-selling or selling their stock. But if the stock is plummeting, no one wants to buy that stock, they can't get access to that liquidity, they can't repay those depositors, the bank gets into a bit of trouble. That's one of the reasons what is kind of pushing this whole collapse forward is that, and that adds to it. So we have seen Bitcoin respond very positively to this. Obviously Bitcoin was really designed from a consideration standpoint where, you know, this is something we're going to be using as a consequence, or was developed as a result of that 2008 financial crisis. It was developed to kind of protect people's value moving into a banking collapse. So Bitcoin has seen quite a positive reaction, but that is not really the whole true story. The other point of view is obviously with the Feds announcing they're going to bail out the banks, that takes a lot of money, right? It takes a lot of money printing to bail out potentially hundreds of billions, if not trillions of dollars of money, okay? When they're turning on those money printers, inevitably, it is very contradictory to be able to start ramping rates. So if rates are going to be going up, we can't have those money printers on, we can't bail out these banks. So the Feds are in quite a difficult position here. If they decide to bail the banks out, which they've decided they're going to do, inevitably they cannot increase the rates, and therefore we are going to see a market be a better situation for these risk assets to move up, and that is kind of what we're seeing over here. We'll discuss it in a second more. Anyway, March 5.29% in the green, 24-hour volume up 31%, liquidations down 4%, 200 million in liquidations, 159 billion in 24-hour volume, open interest up 8.35%. And again, March was probably one of the most bearish candles I had seen for a long time. And we had a doji candle print after a large green candle indicating a reversal, and all of a sudden, guys, in the last 3 days, this candle that was down 13% has been completely reversed based on the narrative shift in the market. Now, narrative we'll discuss in a second. Moving on, volatility 3.5 for 30-day period and 2.99 for 60-day period. Looking at liquidations, like we said, 202 million, and for the last 24 hours of liquidations, we have seen quite a lot of shorts liquidate as the prices rallied, but of course we have seen a few longs sprinkled here and there liquidating in those positions. Let's go ahead and discuss the broader markets and the narrative at the moment. The DXY has dropped a considerable amount, okay? When the Feds announce they're gonna bail out banks, what does that do? Like I said, it takes a lot of money. If you're printing a lot of money, the value of your currency declines. So the US dollar has lost value. It has decreased in strength in comparison to other currencies, and therefore the DXY is visually representing that on this chart, showing us that the US dollar has weakened. Of course, with weakening US dollars, asset prices generally rise, as $1 US can now afford less. $1 US can now afford less of that particular asset, and therefore the asset prices rise in comparison to the US dollar value. And that is why we're seeing asset prices rise, particularly Bitcoin, or is at least added to the fact why Bitcoin has risen over the last couple of days. I want to just quickly talk a little bit more about the correlation between stocks and crypto, and more importantly, the impact CPI and potential interest rates and inflation will have on asset prices going forward. Now, I do want to say really quickly, the DXY is actually sitting at support here in this blue zone. This is the 103.5 to 104 zone. If we do bounce from this level and reclaim this support, we could potentially push back up to 105. But again, with CPI coming out in 10 hours, so 9.5 hours, we do expect the CPI data to determine or be the determining factor in which drives the DXY over the next 24 hours leading up to FOMC. So the CPI data is coming out quite soon. That is going to be the leading data in regards to what the interest rates are going to be, and therefore determine the narrative in the market leading up to FOMC, and thus determine the overall direction of asset prices in the next few days. I think specifically 7 to 9 days. Moving up, guys, I do want to talk about one thing before we get onto anything else, and that is going to be this chart right over here. This is a really interesting chart I want to talk about. It will help you visually put together what is occurring in the markets. So the red line is CPI, the black line is interest rates. This area on the left side is histogram. Okay, this is positive interest rates, this is neutral, this is negative overall interest rates. We saw inflation rise for a very long time. As a consequence, the Feds decided to raise interest rates. Okay, interest rates are always going to be lagging in comparison to inflation, because there's no need to rise interest rates if inflation isn't rising, and therefore it always happens after the fact. In that regard, it is always going to be delayed by what inflation is. So what we saw is a jump up in inflation. Inflation saw a little bit of a spike in the last CPI report, and that led the narrative to, oh, potentially, guys, interest rates aren't ramped up enough. Inflation is still rising, we need to start increasing interest rates more. And that resulted in the narrative shifting it resulted in a narrative shifting upwards that interest rates are gonna rise. And just 4 days ago, there was an 80% expectation for a 50 basis point hike, okay? The narrative shifted and the markets were looking bad. The stock market crashed, the DXY rallied, the cryptocurrency market rejected from 25K and rejected like 15, 16%, okay? In the last 3 days, the Fed announcement that they're gonna bail out the banks, it changes the narrative. It says, okay, this interest rate hike is now no longer likely. We have seen the data reflect that. The chances of a 0 basis point hike, guys, was 0% a few days ago. It is 26.2% now. The 25% hike was 23% a few days ago. It is 73.8% now. The narrative in the market has shifted. The expected trajectory of interest rates, regardless of inflation, is heading down. Interest rates is what determines systematic risk in a market and is what drives asset prices. Systematic risk is determined by interest rates, okay? It can be determined by inflation, it can be determined by taxation policies, monetary policies. The big one is the cost of debt, okay? With cheap debt, people take out loans to buy assets. With expensive debt, people do the opposite. If interest rates are falling and going to pivot, we're going to see the markets rally based on perceived systematic risk or the expectation that the risk is going to decrease. We're in a very tricky situation right now because the Feds cannot actually go ahead and increase interest rates much more without destroying the banks, but at the same time, they're not going to destroy the banks because they have an obligation to protect their buddies, their friends, their donors, all that kind of stuff, and therefore they're going to throw the taxpayer under the bus. I do want to talk about this. I've seen many people talk about how this is a positive thing, asset prices are rising, Bitcoin's up. Look at the bigger picture. If the Fed prints money, it's going to result in inflation. If inflation continues upwards, it's already quite high, it's going double digits. What happens if that happens? Many people will lose everything. Many people are going to get wrecked. The cost of living is going to rise. Guess who gets left with the bill? The taxpayer gets left with the cost of these decisions. Do not look at it short-sighted. Zoom out a little bit. What is happening right now is the retail. The taxpayer is getting thrown under the bus once again to save the banks, guys. That is what's happening. Let's go ahead and get into the stock market. We've seen the Dow Jones reach our target, 32,000 and bouncing. S&P 500. 3,900 on the trend line and bouncing again. The directions will be determined by the DXY today. Looking at bond yields, absolutely nuking. Bond yields have crashed from 5%. Our target, guys, was 5%. We hit 5%. We have nuked since 5%. What a chart. Look at that. 22%, guys. 22% in 4 days. Bond yields are down. Absolutely wild stuff. I can't believe this. I don't think I've seen something of this since I've been in the financial markets, since I've been trading since 2014-15. It's unreal to see, guys. Unreal. Let's go ahead and talk about Bitcoin though, because a lot is happening here. And if you watched yesterday, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. In this video, you would have known we said the next trigger for a continuation to retest the 24.4 to 25.2 level was going to be a close above this trend line. We saw that, we saw a rally, and we retested. Currently, guys, Bitcoin has retested the rising wedge uptrending support. This is a major support resistance flip on a bearish structure. If you remember all the way back over here a few days ago, we're discussing 20K as a major support. The best possible scenario for Bitcoin is we break out of this downtrending trend line and we rally up to retest the uptrending support line of the rising wedge. We have seen the best case scenario play out. Right now is not the time to be taking longs. Right now is not the time to be aping in. Right now is the time to be looking for shorts at resistance, or wait for CPI, as CPI is going to determine the next move for the markets. Okay, if CPI does not come out in alignment with the current narrative, we are going to see a market crash. If it does, we're going to see the market continue. Either way, the market is very overextended here. We're at major resistance 24.4 to 25.2. Watch this level. Let's talk about the 24.4 to 25.2 on a higher time frame. This level is incredibly important, guys. It represents a 200, I'm not kidding, it represents a 274-day trigger / resistance. Now, there's a chart I want to show you in Telegram that summarizes what I'm going to say in a little bit more ease. It is this chart over here. And I'll talk about it over here, but it kind of summarizes it a little easier and I can give you a visual diagram. So essentially what we're in here, we're in a healthy correction / decision zone. This zone is between 19,200 and 24,400, okay? This is a zone where the markets are a little bit more unstable. We haven't really got quite a clear macro direction. We're out of the bear market, but we're not quite in a bull market yet. We're kind of in this decision zone. The major trigger we need to break above to become macro bullish is going to be 24,400 to 25,200, represented by this green bar. Breaking above that puts us into bullish territory. Breaking above 28 to 30K puts us into bull market territory, and dropping below 19.2 and 18.3 puts us in very bearish territory. Very bearish meaning new lows. So right now we are still in this transitionary phase between the bear market ending, a reversal structure developing, and the new uptrend developing. We've been saying this the entire time, guys. We have been bullish ever since 19.2k break. We bought 16.5k, we bought 18k. We're still holding those positions. We've said any correction that occurs that does not result in the price dropping below 19.2k should be considered a healthy correction. Every correction on the higher time frame should be considered a healthy correction. And like I said, in this range, we are in a range of decision. The reason why breaking below 19.2 and 18k is so crucial, as that is because a loss of that level on the higher time frame, I'm going to show you here, a loss of that level on the higher time frame will actually result in Bitcoin dropping below the weekly POC. The weekly POC being the point of control on the weekly chart. I'm going to go ahead and show you over here. If we zoom in, this is going to be the weekly POC for the bull market. You can see right over here, 19.2k. A loss of that level puts Bitcoin under major resistance and will facilitate the next move toward the downside, which can take us anywhere between here, which is 12,000. You see that jump up into VRPV to that local high sitting at 13,900. So we are above an incredibly important support, and for us to remain in a healthy correction, we need to remain above 19.2k. On the flip side, guys, the reason why 25k is so important is because that is going to be the trigger zone for a continuation upwards. Looking at the monthly chart, the 50 EMA, okay? The 50 EMA, looking at the weekly chart, we have the Gaussian channel and the 200 moving average. All of these converge around 25k. Breaking over the 50 EMA, the 200 and into the Gaussian channel on the weekly and monthly will confirm the start of a macro uptrend. We have seen this before. We'll see it time and time again. The technicals do not lie. The charts do not lie. Those are the key levels. The reason why I say a bull market will initiate above 30k is because the 30k level is the prior bull run yearly low. Yearly low of the prior bull run, yearly low of the prior bull run, yearly low of the prior bull run. Every single time we close a monthly candle, okay, above that level, we never ever close a monthly candle back below it. Not once have we ever done that. And therefore, it is safe to assume a monthly close of 30k will trigger the bull run. The bull run takes some time to really start to gain some momentum and some speed. That is when the bull run will likely start, okay? A monthly close above 30k. Those levels are incredibly important. But let's talk about the shorter time frame and how it is looking right now. As like I said, until we really break above this 25k range, and until we break below 19,200, we're still in that period of indecision. Where is Bitcoin going in the higher time frame? What is it doing? And these short-term moves do matter, as you can develop or you can create capital that can allow you to put yourself in a better position in the next move. So currently, from a structural standpoint, guys, we are not looking amazing, right? We have come up, we have retested the rising wedge as resistance. This is a classic support resistance flip as of right now. As of right now, support resistance flip. I will not be expecting any sort of move higher towards upside unless we can get a solid 4-hour close and open within this trend line to reclaim it, and then I would expect a rally to retest the top side, okay? Even if we retest the top side, if we have bearish momentum, this could still come back down. So we do need to keep our eyes on that. However, I would definitely be expecting, guys, a rejection from this point. How low could a rejection take us? Well, we're looking at our prior levels. So we're looking at that 22,600, okay? And we're looking at prior supports that we developed within this range. We'll look at these local low points over here. 23,300 is going to be a really good one. And of course, if we go ahead and bring up the VRPV on a smaller time frame, we'll be able to see even more specifically where those volume gaps are when we zoom in. So we'll go ahead and do that. On the small time frame, if we do expect more of a retracement, we'll have to go down and take a look. So let's go ahead and do that. Our targets, like we said, 22,600, 23,300. We can see a gap between 23,600 and 23,800. We can expect that to be filled if we do come lower. So our targets, 23,800, 23,600, 23,800. 22,300 and 22,600 for pullback targets if we do reject from a level. If we want to continue upwards, we do need to see a double 4-hour close. So a 4-hour open and close above this trend line, pushing into this range to facilitate a move toward the upside. For a confirmed break over 25.2, we need to see a monthly candle. A monthly candle above 25,200 will inevitably, or as a result, close a monthly candle above the 50 EMA over here. And every single time we close a monthly candle above the 50 EMA, we never close a monthly candle below it. So if you want the safest entry point, it'll be a monthly candle above 25,200 will be that safe entry point. Okay, guys, let's go ahead and talk about the technicals next. So like we said, we're at a point of resistance. Right now, you should be looking for shorts. Like we said in yesterday's video, you were looking for longs upon the breakout of 22,600. Your long target was here. If you did that, you perfectly followed that, you would have made an amazing 8% overnight. Okay, great job. Right now, we flip it. We're at resistance. We're more in favor of shorts. We're looking for shorts. Currently, we look for shorts and we have laid our targets. Let's take a look on the smaller time frame now, because if we want to identify reversals, we have to look at a smaller time frame, what the charts are saying. Hourly chart, what are we seeing? From a technical standpoint, on the RSI, bring up momentum, we can see a nice little neckline over here. We have a double top. We can see the price is starting to weaken. Okay, we have rising price overall over here, and we have generally decreasing momentum. You can see it over here, decreasing momentum. Okay, we have that price is kind of neutral. So we have a weak bearish divergence occurring over here, guys, and that obviously is not a very, very good sign. That does signify potential exhaustion. When we have exhaustion at resistances, the probability for pullbacks start to increase. We bring up the Gaussian channel on a 30-minute chart. We should be well above the Gaussian channel, which is great to see. Again, we had a very, very volatile move toward the upside, so we can expect these momentum, these moving average indicators to be very, very spaced out right now. That doesn't necessarily mean the trend is incredibly strong, but it definitely does mean the trend is very, very volatile. And obviously with volatility comes a degree of strength. Moving down to a 15-minute chart, let's take a look. We did push into the Gaussian channel here. Again, a first glimmer of weakness. And moving into the 5-minute chart, we can see we are kind of still holding around that Gaussian channel. I'll be looking for a breakdown to Gaussian channel. A loss of $24,000 would be that confirmation or trigger that we're most likely going to be heading a little bit lower, guys, to those lower targets toward the downside, however we go ahead and do that. Until then, I'd be looking at this neckline for a potential break, as that could trigger that 4-hour close above this level. Right now, shorts are definitely still favored with tight stop losses. I will also say, CPI is coming out very soon, guys. Do not trade too much, be very cautious. The narrative is, as you've seen, can be changed within a matter of minutes, okay? The narrative can shift very quickly. Wait till CPI is over, then start trading. If you do want to trade, do it with tight stop losses. Let's go back to the daily chart and do a quick technical analysis, and then we'll go ahead and call it a day, guys, and come back to you guys tomorrow after we have known that CPI data. Momentum is obviously very, very, very overbought. And like we said, momentum can remain overbought for a very long period of time and the price can still rise. I'll show you a prime example. Let's take a look at the momentum over here. We saw the momentum entered the overbought territory on the 15th of Feb. After the 15th of Feb, we still saw Bitcoin rally 10%. So momentum can remain overbought for an extended period of time and the price continue to rise. That indicator alone is not enough to say we're going to crash, but it's something we have to be identifying, as generally when the price moves from overbought back into the neutral territory, that is when the pullback begins. So we start to see this crash back down here. That is going to be a warning sign. We can see the market cipher B here is kind of showing some curvature at the top over here. It's coming closer to overbought territory. Again, if it does print a red candle, a red dot, it will signify a shift from strong positive momentum to weak positive momentum, again signifying a potential pullback, something to keep your eyes on. Again, to a 2-hour chart, we have already seen that, right? We're seeing weakening momentum. We are seeing that decrease in strength of momentum as well. And we are seeing the price at resistance. To an hour chart, we see that even more exacerbated. What I would like to do here is show you the RSI, specifically the current RSI trend. Going back from that trend yesterday, we still have the same trend lines intact. We're looking at that uptrend on that RSI. A breakdown of that uptrend on the RSI, guys, will be the point of a potential short entry on a higher time frame pull down towards those lower targets. So keep your eyes on the trend of the RSI, as a break of that trend will signify a shift in momentum, and a shift in momentum generally signifies a potential shift in price direction. Okay, I'm going to go ahead and leave it there, guys. If you have any questions, leave them down below. Obviously, a lot of today's video was kind of consumed by the CPI talk, but I hope you did find it informative and educational. Let me know down below what you think. Do you think more banks are going to crash? Do you think the economy is going to be in a worse place because of it? Do you think the taxpayer is going to be thrown under the bus again? Let me know how you think it's going to impact Bitcoin and the traditional markets. I'm interested to hear what you guys think down below. Of course, no one really knows the correct answer to this. We can only speculate. But as far as my speculation goes, if they do bail out the banks, I do believe it will only spell trouble for taxpayers and the general middle class moving down the line. Generally, this is just another attempt at kicking that bucket down the road. And I think if they do decide to kick this bucket, I genuinely do not think there's going to be any potential for recovery. Right now, the potential for recovery is already so slim, but this will be the final nail in the coffin for our current financial system. They do kick this bucket, there'll be no recovery, and I believe they'll introduce central bank digital currencies as a way out of the pickle they've put themselves in after the market collapses, after everything goes to shit. Okay, let me know what you think. Again, I hope you enjoyed today's video. If you're interested in learning how to trade, you can join us on the Crypto Academy courses at gmail.com. Here's the email: contact us. 10-unit course for teaching absolutely everything you need to know: how to trade, technical analysis, market structures, market patterns, risk analysis, emotional control, etc., or here. Thanks guys for watching. See you tomorrow.